What's going on, everybody? So here we are. All right. This is going to be the weekly review. Going to do this live for everybody so we could just see what's going on and what exactly were we looking for going into this week and how we were planning on trading and how we knew the draw on liquidity, how we get bias based on draw on liquidity. We'll go over a number of things. So just give me a second to send out the link to everybody. All right, cool. So here we are. Obviously, you can see that we had a pretty strong decline on the market structure after getting below this level here, right? So this was the indication that we had a shift in structure. And then we proceeded to make a run below this low here, which would have confirmed the break in market structure. Now, I am in the middle of putting together the course that's going to explain this, but once we have two lower lows after proceeding an uptrend, we've changed the overall structure to reversal, so we're no longer going up. Okay, so this is the shift, and then getting this candle right here below this low here makes the break. So now all we would really be focusing on in terms of structure is the draw. If we understand the draw on liquidity, we can generate our bias. We know that in order for NAS to trade higher, that they have to break this old area of it that was inefficient, right? It was inefficient when we were buying here. However, when we re-delivered here into this imbalance right there, when this next day pulled up, it rebalanced, respected this order block, and then closed down. Therefore, this range is a balanced price range. So this is all we were looking at going into this week is, will we fail to trade higher? More than likely, yes. What would be the draw on liquidity? You have two lows to the left that you'd be looking at in terms of higher time frame analysis. You have this low, which is the swing where this impulse broke above these highs and created an all-time high for the year. And then you have this area of accumulation, right, where price retested here. So ultimately, those are two strong levels where you could have targeted, but we would be looking at this level specifically because this is where the majority of sell side liquidity is. So this is the draw. Sell side liquidity. And the reason why I decided to just use a blank chart is so that we can all do it together. Okay? But that's it. That's all you were looking for. Everything after this, in terms of biases, we would be looking for power of three, which is we were looking for a accumulation stage at the beginning of the week, followed by a manipulation stage and a distribution. If we expect the weekly candle to close like this, bearish, right? The phase of manipulation, if this is a bearish close candle, the manipulation phase is from the open to the high of the week. Okay? All of this thick candle movement here is the distribution phase. And then this wick right here would be the pullback, right? The tail of the week. So if we expect this week to be bearish, then we're looking for high of the week to form between Monday, Tuesday. Okay? So that's just simply understanding power three. Now you could transfer that idea to the daily, to the intraday time frames, 1 hour and 15 minute. And I'm going to show you all of the entries that I personally took this week. This was not a winning week for me, actually, because I actually got stopped out a few times. Even though I knew the direction was right, I understood that timing is everything. Because remember, it's bias, draw, right? Then understanding power of three and dealing range, in which you're to premium or discount, and then time. You need time. If time isn't delivering price, if you're not focused on time and you're not able to get in when price is going to deliver, you could still lose. So this is a good opportunity to show everybody what happened this week. As you can see, it was a downtrending week. Let's go ahead and take a look at some of the trades that I took this week. Okay, so we will go down to the 1 hour chart, 15-minute chart after this, but I wanted to start here. So, start of the week. Remember, we want to see early on in the week a run up. Why? Because if we run up, we want to see a run up into a premium. We know that this level here, I'll put it on the chart so that we have it here. There we go. All right, so this shaded area is the area where we expect high of the week to form. Now, one thing I will tell you all is that it looks really great on paper right now. Big sell week. The way that price delivered was a little bit sloppy, as it always is in August, but it still delivered. So, nonetheless, Monday, bullish day. Weekly open price, they shoot up. I didn't trade Monday. No trade was here. Tuesday, midnight price opens, they displace and leave a nice gap left from London. This is the 9:30, the 9 o'clock equity open hour. I trade between 9:45 and 11 a.m. It shot up, it hit my fair value gap, I got in, and I was just targeting basically this gap and weekly open price. Simple as that. At the time, I didn't really realize that I could have held for the short-term trade for the week. Depending on your trade account goals and your system, you'll learn to hold the trades, but that was a winning trade. Simply put, I waited for what? Price to leave displacement in the market, which creates imbalance so that we can redeliver and rebalance, and then I took the short. I'll show you more on that on the 15 after. Very easy day. The next day, simply put, it was just an optimal trade entry. It was just a continuation short from high right down to low here. They came straight to this mitigation block, right? Not only did they come to the mitigation block, but if you look at this fair value gap, it's kind of the same thing as what we showed you on the daily chart. They re-delivered here to this gap, and then they rebalanced right here. So therefore, this area is balanced, and we're at weekly open price. So stock market opens, it shoots up. Now this 10 o'clock hour really got the best of me. I got stopped out. My stop loss was at the rejection block on the lower time frame, and I got stopped out, and then it ran my way. So that was unfortunate, but I still left the trade there because you know what? I wasn't wrong about the direction. I was just wrong about stop loss placement and timing. So that was a losing trade, but right about the direction. So I'm grateful to understand that I had the right bias. The next day, same thing. We ran sell side. We're below weekly open price. At this point, you're bearish. You should have a bearish bear. You should only be thinking about terminus. What do I mean terminus? This is the terminus. You should be thinking, how low can we go in this week? This is it right here. This is what we're trying to target. So the next day, you should just be looking for optimal trade entry. Now, how would you be able to create that bias? Because you're looking at the 3-day look back. You already had an accumulation, a manipulation, and you're in a distribution phase now. So this is the highest probability setup to have continuation shorts. There's a fair value gap left from a previous day's run on sell side. You take that with optimal trade entry. So you would just simply do this, right? This is the last distribution level. It goes right into that. Now, this is at 8 in the morning. I don't trade that time. So I actually waited for the displacement here, and then it came back in the PM and came back to this 1 hour fair value gap. I miscalculated. I was using a 15-minute fair value gap, which ended up being this 1 hour order block, and it did not come to that, and I did not get tagged in. As you can see, I didn't get tagged in. So that's 2 days in a row. I was right about the direction. That day I lost. This day I didn't get tagged in. And then it ran to terminus. So then we finally run to the liquidity objective. Now, this is where you have to expect two things can happen. It's Friday. It's a wild card day. They have established that they ran to the terminus, so they can either go lower. So I had some lower targets down here, right, which is the mean threshold of the daily order block, which I'll show you over here. I was basically targeting this potentially if they wanted to go lower. But what ended up happening is I waited for true day, and you could see here that they created a 1 hour change in state of delivery. This candle right here shot up, and I was anticipating that. So they were accumulating all day. I did catch this long here, and I took it all the way up to about 7 a.m. I didn't hold it to midnight because the price action was sloppy. So really, if you think about the weekly model, it was just a bearish power of 3 weekly expansion. This was an expanding week. This is a great week to make money. How could you lose in this? Let me show you how you can lose. Let's go to the 15-minute time frame. So the first day, you can see, now we're focusing on the power of 3. If I only trade within 9:45, so let's just say here's 9 o'clock, 9:30 right here. This was a limit. I had set a limit there. 9:30 to 11 o'clock, you can see there was an expressive movement here. This was an easier trade. This one you could see because it accumulated, it ran above a short-term high into a fair value gap, creating an intermediate high. And then this right here creates a failure swing. So if you don't know about intermediate highs and failure swings, click the link below, join my community. I'll give you access to all the packets and things where I talk about that. Or you can go and watch an ICT video and find the information through all the rants and talking that he does. Either way, just get the information. I'll tell you again, I run on a short-term high right here into an imbalance that then displaces below a low, creates an intermediate term high. You have a high, lower high to the left, and then you're anticipating a failure swing lower high to the right. That is an intermediate term high. It runs away, and you're paid within 90 minutes of being in the market. Easy trade. Next day, same thing. We're focusing on the same thing. 9:30 true day to about 11 o'clock. So if you look at this, this is a little bit tougher because this is midnight. They're accumulating. They break structure, but they don't actually displace until what? Until they actually, I get in at 10:45. They gave an order. I was anticipating an order block to form here. Right? I was anticipating an order block to form me at 10:45. Guess what? They shot up, took me out, and then right here they created the order block at about 11:30. And then they displaced, and then of course we get the retest at 2:30 in the afternoon right here to the mitigation block and fair value gap. This is a timing issue. Right about the direction, a little bit inconsistent with the time because they were sitting there. If you go down to lower time frames, you'll see it's just a lot of a mess right here, which we don't need to go into and dissect. You can do that on your own time. Moving forward, notice that I'm writing market maker sell model here. Why? Because this is previous Asia's low. They basically do a corrective movement into this 1 hour mitigation block. 1 hour order block and fair value gap here on the 15. They make a high and a low and give you OTE here in the afternoon. This is tough because they moved before the true day. So here's true day right here. They open and they already hit my level. This is one of those situations where I just have to have discipline and say, it didn't happen at the time that I trade. I have to accept that. I did set a limit and it did not come to this 15-minute gap. It actually came to the 1 hour consequent encroachment of the SIBI, which is what I put here. So that's something I need to study is, what levels am I more going to be guided by? The 1 hour levels or the 15? More often than not, I should be following the 1 hour levels according to my plan. But this is a market maker sell model. You have an accumulation phase, a manipulation phase, and a distribution. That's AMD right there. Accumulation, manipulation, distribution, and they take out. So now looking at this, there is a 1 hour imbalance that I thought price could reach up to today. Check this out. So you see here, we're already tanked today, and we've already reached the weekly objective. So I'm not really expecting sells. I'm expecting buys up to at least midnight. If you see here, they sat here and accumulated all through today, and then right around 10:30 they shot up. I took the entry here at 10:30. I almost got stopped out, and I took profit at 7 a.m. because it was just finicky. I mean, this price action, look, even at 113 they pulled back. Like, there's just a lot of sloppy movement, and these are the type of things when you're in the trade, fam, that could be the reason why you lose. And that's why experience is the only thing that's going to help you to gain confidence in the concepts. As you can see, the concepts work. Sometimes you as a trader don't allow the trade to breathe, and you end up over managing or over leveraging and unable to hold the trade long enough. You can't put your stop where you need to. So, you know, this week overall, it was a very, very good week. There was money made, so that's important. And as you can see, there wasn't always movement between 9:30 and 11. A lot of the movement happened in the PM or just after 11 o'clock. So for those of you who have strict times that you trade the ICT silver bullet, you know, this is one of those situations where you're sitting still because you have time parameters that you look for trades in. And August is not always going to deliver as clean as some other months. So that's all I have for you guys today. If you found value in this, please like, comment, subscribe. I would love to hear your feedback. If you have any questions you want to meet up with me, check the links on my link tree. One-on-ones, course is coming out soon. We have the analysis group. It's $25. Anything you want to do, check it out.